We're going to be talking about currency pairs. Now, what's a currency pairs? Currency pair are the combination of two currencies. You know, in the forex industry, we don't trade just one currency. Like I said earlier, you can either be buying or you can either be selling. So if you are buying, if you want to buy euros, you need a different currency. Let's say, for example, here in Nigeria, if you need dollars, you need to go there with naira to get dollars. So that's how it is in the forex industry. A currency pair is the combination of two currencies. So you can either be buying or selling. So let me write a definition. So a currency pair are the combination of two currencies to either buy or sell. For example, this is my trading view. Now, if you look at my right hand side, you see different currencies there that I trade. The major currency I do trade is Euro USD. So Euro USD is an example of a currency pair. USD JPY is an example of a currency pair. GBP USD is an example of a currency pair. Euro CAD is an example. CAD USD is an example. We have so many of them. Now, in currency pairs, we do have two major type of currency pairs. Are you guys following? Now, we have two major type of currency pairs. We have the major currency pairs and the minor currency pairs, and then we have the exotic currency. So we have the major, we have the major currency pair, we have the minor currency pair. And we have the exotic currency pair. So now, the definition of a major currency pair. A major currency pair are any currency pair that is made up of USD and one major currency. In the whole world in general, we have major currencies like Euro is a major currency, USD is a major currency, GBP is a major currency, CAD is a major currency, AUD is a major currency, JPY is also a major currency. Now, a major currency pair is a combination of any of those major currencies and USD. For example, Euro USD is a major currency pair. Why? Because Euro is a major currency and USD is a major currency pair. I hope you guys understand. So the Euro here is a major currency and USD is a major currency. So the combination of any major currency and USD is what we call a major currency pair. So let me list more example. We have GBP USD. We have USD CAD. USD CAD. We have USD JPY. So I'm going to be sharing my my notes in the group so that you guys can copy. But just know that a major currency pair is a combination of one currency and USD. That is what a major currency pair is. A combination of one so a combination of one major currency pair and USD, that is what we call a major currency pair. Now, let's drive down to the minor currency pair. Now, a minor currency pair is a combination of a major currency and another major currency. That is what a minor currency pair is. So just a combination of one major and another major. That is what a minor currency pair is. So if you're writing, I'll list example. Minor currency. So now I want you guys to know one more thing. In total, we have a total of 8 major currencies. We have a total of 8 major currencies. And for currency pair, we have a total of 7 major currency pair. While for minor currencies, for minor currency, we have about 21 minor currencies, and we have 7 major currencies. Okay, so I'll list them down and send them into the group. Now, exotic currency pair. Now, exotic currency pair are currencies from developing countries, not just developing countries, but currencies that are new in the market, currencies that are coming into the market newly. Example of exotic currency is, let's say, Nigerian naira. Thank you. So, for example, let's say NGN USD, okay, Mexico currencies too, and some other currencies. So just know that most of these currencies that are still coming into the market newly, like Nigerian currencies, we have Kuwait dinar, we have Brazilian reals, and others. These are all exotic currencies. So are we following?
200.
Is there any question? Hello,
Wait.
any question? Hello,
Hi. No question, sir.
is there any
No question
question?
for
No
now.
question at all.
Okay, so that's all for currency pair. So next, I'm going to be talking about technical analysis. I'm going to be talking about technical analysis, and I'll share a video on how to use your MT4 and MT5. So next, I'm going to be talking about technical analysis. So, what is technical analysis? Now, technical analysis is a technique that is used in order to analyze the market. That's a very simple definition of technical analysis. It's just a technique a trader used to analyze the market. Now, in the forex industry, different traders have different way they usually trade. There are some traders that use one strategy, the other trader combine both strategy to get his own, and all of them are also technical analysis. So technical analysis is just a technique that you use in order to analyze the market. For example, if you can see my charts, you see all these things I draw on my charts. These are all technical analysis. So technical analysis is just the way a trader analyzes its own market to its own understanding. That's just what technical analysis is. I hope you understand. So in market analysis, apart from technical analysis, we also have fundamental analysis. So it's not just technical analysis that is being used to analyze the market. Apart from technical analysis, we also have fundamental analysis, and we have sentimental analysis. We have fundamental analysis, and we also have sentimental analysis. So now, a fundamental analysis is a way of analyzing the market using economic data and news. So let's say for example now, Donald Trump is giving a speech about inflation or anything that is going to benefit the United States. Now, that will automatically affect the market. So fundamental analysis is a way of analyzing the market using economic data, war, what is it called again? Market price and so many others. So why sentimental analysis is a type of analysis where a trader analyzes the market using his thoughts on the market. So let's say because of coronavirus, people won't be going out a lot. Now, okay, and you are trading US oil, you know that automatically the usage of fuel will be cut off. Like, people are not going to be walking around, so the usage of fuel is going to be very minimal. Now, you know within you that, okay, the price of fuel will start dropping. So that's just sentimental analysis. I hope you understand. So technical analysis is this one we draw on the charts, while fundamental analysis are just majorly news like speech, war, economical data, employment rates, and all of that. So, but we are going to be focusing on technical analysis. Now, after technical analysis, at the end of the class, I will brief us a bit on fundamental analysis. So, right now we'll start with market structure. So now, what is market structure? I hope you guys can see my screen. What is market structure? Market structure is the way or manner in which price moves, either trending, consolidating, or reacting from zone to zone. Hello, are you guys following?
Yes, sir.
So market structure is the way in which price moves. It can either be trending or consolidating, reacting from one zone to another, or you can say reacting from supply to demand. For example, now this is market structure. This is market structure. We can see the price don't usually go like, let's just say, straight. It usually move in form of zigzag form, high low, or low high, or the market might also be consolidated. So for example, now you can see that price came down like this. Price came down like this, reacting from this zone, and then went up. It came down again, reacting from this zone, then the price went up. So this is just what we refer to as market structure. Now, if you are building a house, the house will have a certain structure. Okay, the house will have a foundation, and then you start laying block and all of that. The same thing for the forex market. The forex market also have a structure. You cannot just start building at the sky. That is why when we started the class, I started with what is forex, for you to know that, okay, this is what I'm going into. It's just like when you go to the university to start to study building engineering, the first thing they normally teach at the 100 level or the ND level is what is this. Okay, so now the whole structure you see here, everything you see here in the forex chart is what we refer to as market structure. Market structure is just the way in which price reacts from one zone to the other. The price might either be going up or coming down, or even ranging. Okay, the price movements are normally in waves. They usually don't go straight, they always move in wave. For example, you see as the price is going up, it's bullish. But instead of going up straight, the price will usually go up, come down, go up, come down, go up, come down, like that. So that is just what market structure is. Market structure is just the way in which price reacts. So price might either be going up or coming down. So for example, this is how price reacts. This is how price reacts. So you will never see the price just going up straight. For example, let's just say you saw the price going up straight like that without making any retracement. It's usually hard. So now this return back that price usually make is what we call a retracement. So since price cannot just go up straight, but it usually go up, come down, go up, come down. Now the coming down is what we call price retracement. This is what we call price retracement. Price cannot just go up like that. The price will always go up and come down, go up and come down. It will come down, it will go up, come down. Same for the downtrend too. Down, up, down, up, down. Now, this pullback the markets normally make this pullback like this instead of going down straight like this, but the markets normally make pullback. This is what we call a retracement. Retracement down, retracement down. So you can either call it a retracement or you can still call it a pullback in the market. I hope we are following. So this is what we call price retracement. Price retracement. Now in market structure, we have three major directions that price usually focus on in market structure. Price might order might what is this? Okay, price might either be in an uptrend or in a downtrend. So price might either be going up or coming down or going sideways. I will show you an example. So this market structure. Now we have the trending markets, which is either up or down. Then we have the ranging markets, which is a sideways market where price respects a certain high and respects a certain low. Then we now have the one we call a choppy market. A choppy market, it's a type of market that has no certain direction. Just where price is not going up, it's not coming down, it's not going sideways. Like I use broken scatter markets. So that's what we call a choppy market. In a choppy market, price don't have a particular direction it's focusing on. Now, in a trending market, price might either be going up or coming down. In a ranging market, the price normally respects a low, a high, a low, a high. Like this. This is what we call a ranging market. But in a choppy market, the price might just go up and it starts ranging, come down, start ranging, go up. Like price don't have a certain direction. That is what we call a choppy market. So I think I have an example here. Yeah, this is an example of a trending market. So a trending market might either be going up or coming down. It might either be on an uptrend or a downtrend. Either an uptrend or a downtrend. So please let's note the market might either be on an uptrend or a downtrend. You can see this is my chart. Either an uptrend or a downtrend. Now, for a choppy market, a ranging market is just a sideways market like this, respecting a certain high and a low. While a choppy market is usually a market that has no direction. Like this, you can see this market has no direction, just going up or down. A choppy market in Forex refers to a condition where price action is errated from no clear direction or frequent unpredictable markets. So the market is not going up, it's not coming down, it's just going in any direction. That's just what a choppy market is. So